Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of foreign exchange markets. Eurodollar. A second bullish white soldier yesterday and a follow-on from the previous session's bullish harami that bounced up off the long moving average, currently at 118.39. This time the market broke up and closed over the lesser Fibonacci levels at 118.97 and 118.87. Now, whilst we still have target X below in the 118.05 area, this is the target for the action so far in 2021 being a halfway hesitation. I'm minded to think that the market came so close to it on Tuesday that you might call it reached. So far today, a fresh attempt higher, punching through the next overhead resistance, the middle tine of the 2021 bearish Andrews pitchfork, currently at 119.48. Beyond that, we have the recent 50% Fibonacci line overhead at 119.75, and then the flatlining medium moving average, currently at 120.44. Cable, aka sterling against the US dollar. A second bullish white soldier yesterday, but stopping short of testing the overhead rising combination of the short moving average, currently at 139.52, and the more important middle tine, currently 139.60, of the late June, late September 2020 bullish shift pitchfork. So far today, a further, hesitant, testing of the overhead middle tine. Very, very cautiously. Euro sterling. A second, if smaller, indecisive spinning top yesterday. The market is so very hesitant going lower, even though we had the lowest close since February 2020 and the second equal lowest low as well. This is, I suspect, all about how the market approaches the two targets below. Target X2 for the second quarter of 2020's head and shoulders top, that's in the 85.15 area, and target X1 in the 84.75 area, the target for the recent sideways triangle. Let's wait and see. So far today, a further seemingly reluctant dip and now a pullback up. All very limited so far. We still haven't as yet breached the low made 2 weeks ago at 85.41, and this is the third consecutive attempt at trying. US dollar against the Indian rupee. A really interesting bearish inverted hammer pattern yesterday. The market opened a little higher, spiked up over the declining partnership of the middle time, currently 72.92, of the early November 2020 to late January 2021 bearish Andrews pitchfork, and the short medium moving average, currently at 72.98. That's before dropping down to close lower on the day, just ahead of the support of the 50% Fibonacci line of the July 2019 to April 2020 move at 72.64. Now, inverted hammers. Inverted hammers are very interesting. They are traditionally seen as bullish reversals, but the data indicates the opposite. Something like 60 to 70% of the time they are bearish, and I have a suspicion that this one may be the case here. It all depends on what the market does at the 50% Fibonacci level below. The reason why? Well, that is because there is a possibility, just a possibility now, that the action over the last 2 weeks or so may have made a possible descending triangle pattern with the base on the 50% Fibonacci line. It is too early to say for sure, especially as it looks so high and narrow, but it could very well be that way, so caution. So far today, a test down to that 50% Fibonacci line at 72.64, and that's it so far. Very hesitant, it seems to me. US dollar against the Brazilian real. A second bearish black crow yesterday, and black Maribosa, and a suitable follow-on low from the previous session's bearish harami. What is more, something that I pointed out yesterday, that with both Monday's and Tuesday's action together, those two have created a 2-day bearish tweezer top pattern, something that could only be seen with the aid of yesterday's bearish action. The market's fall yesterday halted and later closed around the very recent congestion centered at the 567 even level. It'll be interesting to see if we follow through lower today. US dollar against the Mexican peso. A second bearish black crow yesterday, and a more than suitable follow-on lower to the previous session's bearish engulfing pattern, and also the previous 2 sessions pipe top as well. Yesterday's market was framed on top by the lesser Fibonacci level at 21.2711, and the drop punched down through and closed below the long moving average, currently 21.1371, the old broken upper bull channel line, currently at 21.0224, and the lesser Fibonacci level at 20.9030, closing just below that last one. So far today, a further test lower, utilizing the lesser Fibonacci level at 20.9039 as overhead cover. We're now approaching the rising short moving average, currently at 20.7366. But the real test will be below that at the Fibonacci congestion 20.62 to 20.5849. I know they're odd numbers, but it's true. The 20.5849 is the more interesting, as it is the 50% Fibonacci line of the very recent move. Additionally, if we have a drop today similar to the one we've had these past 2 days, then the door may be open for a weekly key reversal. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investor Services International Limited. And here is the final bit.